Good evening, members of the Armchair Trading Floor. Just Mike Bell here again on the 23rd of September 2018. So ready for another good week in the trading floor. So as we start to break down this week's opportunities, obviously last week we had a strong week as well in terms of signals and some more education for you guys. So one of the main things that I think any of you traders should be focusing on is just retesting and journaling your entries. Some common ways that we retest and journal our entries is simply just by having a blank Word document. We can actually share a template of ours in the Telegram group and in the EchoFin group for you all, so then you can obviously download that. And we also have an additional trade tracker, which is an Excel spreadsheet, so that you can actually manage and record your trades and actually write some reasons in why you do the trades that you take as well. Obviously, great that you follow our own signals, but the main importance is that you become independent and self-sustainable in the markets. Now, to start off, GBP Swiss franc. Obviously, last week we had a solid start to GBP Swiss franc, where we actually called this first leg down from 1.2730 all the way down about 70-80 pips on that one. Price did retrace. We did mention the levels, these two levels, in our watch list from last week, where we obviously had the first entry, but we also mentioned that price could do a retest, which in fact that was fulfilled at the very end of last week and then rejected on Friday with a massive crash down about 200 pips. Now, if I go back and zoom this out on the weekly time frame, if I take us to the weekly time frame on GBP Swiss franc, you can actually see that overall we're going back years and years now. We've actually been on a massive decline from the highs of 2000, of the year 2000, and then we had a further drop on the back end of the recession from 2007, 2008, and we've still just remained below that moving average, and I think we're going to be continuing lower in the near future as well. Moving this into the daily, very clear Elliott wave pattern being formed on the daily and the 4-hour time frame. Again, we shared our Elliott wave pattern in the group, but you can see here, leg 1 pulled back, 2 to 3 is always the longest leg, but leg 3 to 4 will never touch the same space as leg 1. So that's what gave us extra confirmation of taking another short around this region. Additional to the break and retest of this trend line right here. If we zoom out into the zoom in into the 4-hour time frame, we can actually get a clearer vision of the market structure here. So we've obviously had the Elliott wave, but we've also had a 1 rejection of the trend line, 2 rejection of the trend line, and retest. This is what indicated this very strong move on Friday's closure. We will probably start the week by dropping down possibly 100, probably about 100 to 80 to 100 pips, and just touch this 1.2450 level before just moving and consolidating to this trend line to see if we can get another break or bounce scenario. Again, heavily bearish. What the price usually does is you normally have a bit of momentum going down, and then we consolidate, price will come and then eventually collapse to the downside. So that's what we see for GBP CHF. On an intraday perspective, what we can be looking for is a tradable opportunity. So I'll need to zoom this in on the hourly time frame to see if there is any opportunities that we can highlight for a tradable setup. Now, we have had the moving average crossover, so you can see first moving average from the 20 and the 9 moving average have crossed over. This indicated a very sharp move to the downside. You can see that we also had a slight crossover from the 200 and the 50 moving average here. Again, that'll help with the continuation. But we need to be looking at a level of resistance. Now, a clear level of resistance is actually highlighted from these wicks. If I look over from the 5th of September around 2 p.m, you can see that there is a wick range right here. We've had a wick range from that moment in time, and we've also got a wick range right here at 1.2606 to 1.2608. Now, if you're looking for pending orders on GBP CHF, it's more than likely that you're going to fall into a rejection zone around about this 30 pip range right here. So as price moves down towards the start of the week, we can look for further short setups around about the 1.2610 with maybe about a 50-60 pip stop loss, but then hoping to take us down to the 1.220 support. So potentially grabbing another 400 pips over the course of the next 2 weeks as well, as we go down to the major support region. The next chart that we'll be looking at is USD JPY. My chart hasn't actually in fact reloaded as of yet, but again, using the Elliott wave theory, you can see how we've broken down this current market structure by identifying the impulse and the correctional phase. We sent out 2 tradable signals on here where we actually traded approximately about 200 pips to the upside. However, we failed to tap our 1.1292 take profit, and the market's actually retraced about 30-40 pips. We do see this 112.92 level being fulfilled towards the start of the week because we're only 35 pips to the north side, and we should be hitting that around about 1 to 2 p.m. tomorrow. We can expect to get some consolidation around this level as we are on the break off this counter trend line. If I just zoom out, you can see that we have a descending channel forming here, and prices within this descending channel. We do expect price to continue to rise a little bit higher and then clear 1.13, possibly 1.1330. So we would get some expected drawdown, but we need to look for the sell move to be triggered once we've spiked up but then cleared 1.1273. So no sells until we've expanded past 1.130 and then come back into the 1.1273. We should expect some strong rejections around this zone and potentially a lot of manipulation after this correctional period has been fulfilled. Now, looking at the US dollar. So as I go to the DXY, let's just open up a brand new chart. Going into the daily time frame on the USD dollar index, you can actually see here on the daily time frame, following our last few weeks watch list, you can see that this head and shoulders pattern is still very, very valid and is in fact due to be playing out. Price respected the, I'll just zoom this in, price respected the 200 moving average, as you can see that we spiked down into the 93s, but the USD managed to try, and the bulls actually try to fight back. So 93.80 is a new level of some major support. Once we've broken that level, that's where we're going to see the first tumble. However, we are now in a very good position to see some strong buy orders being placed on XXX USD. Now all we need to wait for is price to spike up and then to continue lower. If I just get us on a 4-hour time frame, this will become very clear. Again, we called the right shoulder from the 96.50 where we had this candle's reversal pattern. right here. So everything is playing out to perfection, and we're seeing a nice move to the downside. If I extend the fib on this setup, our A to B, you can actually see that we actually had A at the top, B at 94.40, we had a sell at the 50% fib, and then our D leg is being completed. Price will more than likely shoot back up to the 23.8 level fib around about the 94-95 psychological level before tumbling to the downside. Now we need to wait and not take any XXX USD buys until that level has been fulfilled. So we need to wait for price to come, and this actually ties in around about the same region as this 50 moving average as well. So we'll be looking at further sells around this level, the 94.95 to the 95.20 level, before looking at any executions on our sells. But for now, we can expect all USD pairs to try and push to the upside before its final descent as we go into the back end of the last quarter of 2018. As I go to the 1 hour chart on the dollar index, just to try and find a nice tradable setup for us, there's still nothing yet that's actually being shown in terms of a tradable setup. It wouldn't be very clear to actually have a trend line shown at that level because we've got our moving average below that trend line. Now, what I do expect to see is price to come down to around that 94.05 level, and then further longs be executed. But let's just see how this one plays out. That's it for this week's watch list. Hope you have a safe, tradable week, and we look forward to speaking to you all in the full members zone.